Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the news service is a little bit starved of fresh news, putting down the dip in the dollar to the intervention fears. You know what? There might be a little bit of truth to that, but generally speaking, it just looks like a repositioning of the market, right? So people cashing in the US numbers. I've been saying it for the last two or 3 days. We've seen a turn in the data, right? So there's no sort of significant positive data coming out of the US. We'll see come Thursday, but up until then, it is going to be a little bit of a battle because, and you'll just see things drift into the range. So the dollar index drifting lower, and you've seen euro, sterling, well, Aussie sort of went up, but not a hell of a long way. And Kiwi didn't move much. That's dollar weakness was in the market, and you've got dollar CAD finally catching up with that oil price at 81 3/4. Dollar yen, well, a little bit of a skittish sort of dip there, maybe test the waters, sort of scare the market. And that wouldn't be the BOJ. That'd be just fund managers messing around, right? They used to do it a lot. The dollar Swiss, well, back, wouldn't say it's going up, but stop loss has been triggered there with this, sort of a bit of a bounce back. More after the Swiss cut rates, right? You're selling Swiss, buying dollars just on an interest rate differential there on dollar Swiss. So on the hourly charts, it looks like a little bit of a mess. And you've got a bit of work to do with regards, readjusting your trend lines as you start the week, right? Good idea to sort of spend some time, make sure you get them on the right points and just get, fine tune things, because I don't see a lot going on just there at the moment. And if I go to the daily charts, right, I've included a few trend channels here just to sort of focus you on the short-term trends. Like the dollar index, you know what? The dollar has been going up, okay, on the dollar index. Dollar Swiss, okay, to buck the trend. Short-term has been going down, dollar yen up, and dollar CAD up. Now, I'll come into dollar CAD because it's about to sort of break down through this sort of trend channel, and it coalesced with like a weak support trend line. But we do have Canadian inflation numbers, right? So stronger Canadian inflation numbers makes this a very good trading opportunity and goes with the oil price. And I'll focus on that in a minute. Now, the rest of these pairs, euro, sterling, Aussie, Kiwi, now there's no significant sort of short-term trend channels. These things have been trading in a big range, and those ranges are narrowing, right? So we are building up for something big, but right at the moment, those instruments at the bottom there aren't particularly attractive for trading opportunities. And then when you look at the hourly charts, you can see why these things aren't going too far. They're just sort of, it's like short-term little false breaks everywhere, and that's all you're getting. So make sure you focus on those sort of shorter term, medium term trend channels. I'll be doing a lot more of this as we go forward, just to say you can highlight visually, is this thing going up or down, or is it about to break, or vice versa? Now, let's just focus in on where the action's going to be today. Now, just looking at the calendar here, the Canadian inflation numbers, right? Obviously very important for what's going on. The chance of an interest rate cut, it's about 75% at the moment. Okay, so weaker numbers here definitely confirms a rate cut by the Bank of Canada next month, and then probably pushes them more towards a dovish stance as well. So it's going to be very important for that. Now, to get the move, the real defining move where it becomes like a no-brainer trade, okay, there's two aspects here. If we're looking for the rate cut and Canadian weakness, you want a number particularly below that 2.5%, right, on the year on year. And if you're looking for, some Canadian dollar strength, well, definitely above the 2.7%, right? Now, it's quite often the technical side of things doesn't match up with the fundamentals, right? So now, once you isolate where the major trading opportunity is, it pays dividends to go in and sort of do a bit of research around what's happening in the market on this. And short term, you can sort of really focus in on, okay, what's happening here. Now, we've seen, some decent moves over the last couple of weeks. A bit of a a clean out here on dollar CAD. You know, that bit of dollar weakness. It goes with the the rise in oil, which increases the value of the CAD. And we're right at this sort of level here. Now, this would be ideal if it was here come the time of the inflation numbers, because we've got that trend line there still sort of working away and gives us some, something to sort of aim for. But on the daily charts, as I was saying on the other sort of page there, this short-term sort of up channel in the dollar, it is starting to sort of really buckle at the knees. And we are at a sort of level here that gives us a great entry, right, for it. But this is a strong inflation number. Now, that's a shame because the inflation numbers have been falling and they're expected to fall again. So it may not fit the picture for a trade to the downside in dollar CAD, right? But if we did see strength in the numbers, it's definitely one I would be looking at. What you want to be doing is having a look across the CAD crosses here, and this is where you might find some diamonds in the rough. Now, Aussie CAD, okay, going up. Euro CAD almost trading sideways. Sterling CAD up, CAD Swiss down, and of course CAD Yen up. Now, this is a matter of like trying to work out which one has got the best technical setup, okay, and sort of pure direction. Now, the RBA last week signaled that they're on hold for an extended period of time with rates, right? So that interest rate differential favors the Aussie. If we got weaker Canadian numbers, well, Aussie CAD would be a good trading opportunity here to the top side. Now, you can see in this trend channel, if I just blow it up, okay, you still have, don't get sort of mistaken for what we're doing here. We're trying to identify where the trend is visually, but we also have our sort of key resistance level there as well, which could be a level to get into. But these are daily charts. That's like 120 points away. So there's a chance to get in on the trade when you are looking at these numbers. And you know what? You would come back into the hourly charts and look for some support and resistance levels to get into the Aussie CAD trade. Now, it is down here on support. I would be almost tempted just to jump in on the trade and get straight into that. And then you've got a secondary level here. If we did see severe weakness in the Canadian numbers, well, it's going to jack up above 91.40. That could be a secondary level, right? Secondary entry level, I should say. So that's where I'm sort of looking at. And so looking at, like Euro CAD, I think if we got really strong numbers like dollar CAD, we've got a level here. The trend, like support levels are sort of a bit all over the place. If anything, if you drew one from here to here, it's a bit short term, but it has sort of broken down there or right on those levels. So plenty of room for stronger CAD numbers for a move to the downside. Now, if we got, once again, weaker CAD numbers, well, sterling CAD is going up overall. I would like to be getting into that. If we got weaker CAD numbers, which I think is on the cards, well, then sterling CAD would also be a likely sort of target there as well. So quite a few opportunities. You just need to sort of assess the market as you lead up to the Canadian inflation numbers. Looking across your short-term charts, as I was saying, like Euro CAD looks pretty good. Sterling CAD's got a great trend line here for weak CAD numbers. Okay, bang that straight through there. But also just have a look at whether you're looking at a relative strength or just what's going on in the Canadian crosses, and sort of focus which ones are going up, which ones are going down, right? So that could lead you into a nice, easy trade there. Obviously at the moment, we've got CAD strength across the board, stronger CAD numbers. These things are already sort of going up. Now, don't get sort of over-excited here because the ranges have, only just reset not long ago in New York. So, it's the start of the day, right? Let's see how it looks when we get to the start of the North American session. That's for sure. Now, just on the face of it, we are seeing a bit of a risk-on profile as far as the US equities. They are up, but it's not really transferring into a risk-on sentiment in the currencies just at the moment. Just keep an eye on that. Not a lot of movement just at the moment on the US Treasuries. Pretty neutral, if anything. So, you know what? Like I said yesterday, it's a bit of a range-bound sort of market at the moment. Just let the markets open up, readjust your trend lines, work out what's what, and then you can start piece together the potential trading opportunities. But dollar CAD or CAD crosses is the key today, right? That's the inflation numbers. I'll be running a live trading session on that. Hopefully we get the right numbers. Now, all we want to do is target, okay, what's the best instrument if we get strong CAD numbers, or what's the best instrument if we get weak CAD numbers? And then you can sort of basically put orders on to hit those opportunities. Okay. And once again, the key numbers here are 2.6% year on year, 0.3% month on month. And there's your ranges, right? Of course, keep an eye on the Bank of Canada numbers when they come out, but these are the historical numbers that we're looking at. I think we're going to get, well, the trend is for weaker CAD inflation. But if we did get a surprise, we got some good trading opportunities there as well. All right, guys, that's it from me. Have a good trade day. All the best. Cheerio.